How do you know when it's the right time to buy a home? It's a big question and a pretty serious one. For some people, it's as simple as when you want to buy a home and when you can comfortably afford to do so. But even for people in that position, well, the question then turns into timing and how is the market and which areas are best, and quite often, what is going to happen with prices going forward. These are exactly the questions that Ryan and I are going to answer in this episode. All the driving factors that really help people decide when or when not to make a move in housing. So let's start off with good old Bank of Canada and interest rates. Of all the driving forces out there, interest rates essentially have the most power when it comes to real estate. People have bought historically when interest rates were in the 20s, and people have bought homes when rates were near zero, and everything in between. There are definitely more homes sold, though, when rates are closer to zero, when they're lower, understandably, right? Because payments are largely what people buy when it comes to housing. So here's what you need to know about current interest rates and what's likely going to happen moving forward. There was about a 50-50 chance of the Bank of Canada cutting rates in April, and they chose to hold. Now, with some of the political dust settled, at least in Canada, looking forward, the economists and the markets are pricing in the expectation of two more rate cuts, 25 bips each, within the remainder of 2025. One happening in June and one happening in September. That puts the overnight rate from the Bank of Canada at 2.25% by the end of this year. Now, we did see consumer spending drop last month, which may help a bit with inflation, and gas prices have clearly eased as well. This may stave off inflation in the short term, but we'll be keeping a close eye on that over summer and fall. Also very important with interest rates is the Canada 5-year bond, and that's somewhat stabilized over at least the last 3 months. At least stable in our current climate, where we have basically accepted the fact that a 10 plus bips movement per day is now the new normal. So what does this all mean for your mortgage? Well, variable rate holders will likely see lower payments by November. And those looking to lock in, well, they haven't seen much change over those last 3 months. So, it's a small gamble to lock in or just keep holding and thinking that the bond rates are going to go lower. Today, ultimately, if you can get a 3.99 fix, which you can, it may be pretty enticing. I mean, you got to think it was only a short year ago where those type of interest rates were just anything but a dream, and now they're realized. Ultimately, these fixed rates they might hit low threes by the end of summer, but weigh that against the potential of them actually going back up. Okay, so lock in or stay variable, they're fairly enticing today. So it may not be a time to be greedy with your rate.
Yeah, I largely agree with that, Dan. I think you got to consider the fact too that, inflationary tendencies, a lot of big spending. I think the Bank of Canada is now again going to be monitoring what the Liberal government is doing when it comes to spending into the economy here to stimulate the economy. So it'll be very interesting to see what happens to prices. For those that are on a variable rate mortgage, I would watch it like a hawk over the next 4 to 6 months, because the option to lock that in, I would suggest doing it sometime this year. But I guess, we'll see how the next few months play out. But largely, like, I agree with what Dan said, I don't know if I'd be gambling right now. Moving on, let's talk about sentiment. So what is arguably the second most important driver of home buying decisions is the sentiment, the way the market feels about where it's going. People largely make home buying decisions or home selling decisions emotionally. It's a huge part of our life. It's our shelter. You can have the financial means, but if the economy in the future looks bleak, people pretty well don't buy, right? And we're seeing a lot of that. So the consumer confidence metric is very, very important. And in March, it basically hit an all-time low. But in April, we saw it increase for the first time in a long time. It's only 1 month, and it's way too early to know where we're going from here. But we do need to reference the Small Business Confidence Index, which dropped again in April, hitting a new all-time low, as that's where no new hiring will be taking place. And, the business, that is, can even really stay afloat for the time being. It probably leads more into, fears of recession and what people are feeling on the ground. Relating that to the real estate market, with no confidence also comes no sales. So the real estate outlook index continues to drop and has seen the most rapid 4-week deterioration since the 100 basis point rate hike in mid 2022. Remember when that came out? That was enormous. With this index so low, dropping, plus April sales numbers are very, very low, I don't know if we see any sort of significant signs of uptick in the coming months. The buying pressure, the incentive, unless the property is compelling, we're just not seeing that sort of drive from buyers. Certainly, we're seeing it from sellers. Sellers would like to move, but the buyers, the pricing is just still might not make a whole lot of sense considering where interest rates are at.
With the lack of sales comes an increase in inventory. And from a buyer's perspective, having more choice is a great thing. And that's absolutely an environment we're in right now. So we'll get into that a little bit more, but definitely something to consider if buying a home is on your radar. But something else that is super important that I want people to be aware of is the real estate cycle. Okay, so you need to be cognizant of the cycles that happen within this market. So people who have kind of been paying attention to Vancouver real estate or heard the stories of Vancouver real estate, they're always phenomenal. There's always talk around the dinner table and whatnot, especially during like the COVID era, right? I mean, that's when you basically only heard stories of every home selling in a bidding war with 10 offers, 100K over ask, people lined up down the block to squeeze their way into the open house. Like it was just out of control. And again, it makes for an interesting story. And realistically, a lot of people that have been watching Vancouver real estate have really only seen prices over time go up and to the right for like 4 decades here, right? It feels like a pretty safe bet. Can't go wrong in Vancouver real estate. Obviously, that's not the case and nothing is guaranteed. So, let's just quickly look. West Vancouver, for example, those prices have peaked in 2016 and have not come back to match or go above that. Downtown condos, they pretty much flatlined same time, around 2016, and they've been generally flat or slightly to the downside overall. Of course, there's outlying buildings that are fantastic that will always be targeted and sell well. But to talk in general terms here, there's a couple areas that have not realized the same prices they saw 9 years ago. So I also want to compare this to what happened in Toronto in the 80s and 90s as to insight into what could very well happen in our local market as well. During that time frame, the Toronto housing market peaked in 1989 with an average home price of approximately $274,000 and then went on to decline by 27%. Okay, that's a massive drop by any standard. And it took 7 years to drop that much when it finally bottomed out at about $198,000 for the average home, which took place in 1996. It took about 8 years for that market to stabilize. And what's more, the market took even longer to return to its 1989 peak. The average home price crossed $275,000 in 2002, which means it took 13 years in nominal dollars. However, $275K in 1989 is the equivalent of around $610,000 in today's dollars. So in real dollars, it actually took until 2011 for that market to return to its prior peak, some 22 years later. Okay, so just use that as a reference because it's not always as shiny as some people like to make it out to be, right? Real estate doesn't always just go up, and not even in Canada, and not even in Vancouver. So how much of that cycle could emulate the one we're in right now? Toronto and Vancouver, we both saw a recent housing price peak in 2022. And by all accounts, it may take until at least 2028 to reclaim those prices. It might be shorter in Vancouver as it hasn't declined as much as Toronto has, but let's play it out for fun. In Toronto, the average home price peaked in 2022 at about $1,195,000. Since then, it dropped about 8.5%. Vancouver, more like 5 or 6. But if that market does turn around, let's say next year, okay, and again, I'm referencing Toronto. If it grows at maybe 2.5 to 3% per year after hypothetically bottoming out in the cycle next year, that means a return to 2022 prices not until 2029. So there's like a 7-year gap between peak pricing to achieving it once again. Of course, anything can happen from here, and only time will tell. But it shows that if you are planning to buy a home, always approach it with that long term in mind, and with the potential of seeing, no appreciation, price appreciation during your time there. Would you still buy a home in that case? Ultimately, that's up to you to answer, but definitely approach it knowing that price appreciation is definitely not a guarantee.
Some very interesting stats. Normally we hear the colloquial term of real estate takes the elevator up and the escalator down, but here you're definitely showing that it can definitely take an escalator back up as well. In fact, sometimes it'll just stall out. And it's interesting where we find ourselves now. I wonder, the peaks never last too long and the troughs never last too long. So I feel like we are very much in the bottom of that trough right now, just based on historical data. I guess we'll see how long it takes to turn around. A lot of that, like we mentioned earlier, having to do with interest rates, but also I think, Dan, too, population rates. And, when you consider what's going on with building permits come 2029, could be an interesting mix of issues at that time. Let's also look here at the age of the first-time home buyer. I found this fascinating. So at what age do you think people buy their first home? I mean, naturally, you would think it would be probably somewhere in your mid to late 20s. Terranet, which tracks land transfer data, says the typical Ontario first-time home buyer is now 40 years old. Even in 1981, when Canada's prime rate peaked at 22.75%, the average age at that time was only 32. Now it's 40. This is a staggering testimony as to how challenging it can be to buy a home in Canada's most expensive cities. And I think it also speaks to the kinds of homes that have been built in these cities. Now, when you consider that the national average has increased to 33, here's some interesting competition. In America, where the average home price is 35% less expensive than the average Canadian home, the median age of a first-time home buyer in the States is 38, 5 years later than the average Canadian. This shows that it's not just affordability that determines when someone buys their first home. So why the disparity? Well, US buyers carry a whole lot more student debt than the average Canadian buyer. Makes a lot of sense. A lot of Canadian universities are subsidized, right? In the US, total student loan debt exceeds $1.7 trillion, with many young adults delaying home ownership due to the monthly obligations that they have to repaying these loans, and ultimately having lower credit scores. Canada, with heavily subsidized tuition and less reliance on loans, sees far fewer delays from student debt. I think in a place like Vancouver, too, we see a lot of transfer of wealth here. There's been a huge appreciation, so there's definitely some of that taking place. With more affordable housing in many U.S. regions, first-time homebuyers often wait longer to purchase, choosing to rent or delay homeownership for a lifestyle or flexibility preference. Canada's chronic supply shortage and fast rising prices, especially in these major cities like Toronto and Vancouver that we've historically seen, create more urgencies for young buyers to get in early. Because if they don't, then that train leaves without them on it, and it's very difficult to catch up. Canada has shorter amortization renewal schedules as well, typically every 5 years, and strict mortgage stress tests. This encourages financial planning at an earlier time in your life. The US typically offers a 30-year fixed rate mortgage. Oh my goodness, that is a dreamboat. Giving more flexibility, but less immediate pressure to lock in. And that makes a lot of sense, because why would you buy young if that pressure is not there? In Canada, home ownership is deeply, deeply tied to the financial identity and security of the family, often emphasized by parents and from society, like what we're doing right now, from a very young age. First-time home buyers in Canada are more likely to receive that down payment in the form of a gift or cosign from parents who are securing it against the property that they have, that they've owned for maybe 30 or 40 years, that has appreciated somewhere between 3 and 600%. So there's a lot of differences here between the US and Canada in terms of structure and how we approach housing.
Very interesting socioeconomic differences, just across the border about how people even approach housing from, a viewpoint of your cohorts and your colleagues almost. There's almost like just less pressure. It's just not expected until you're later. But in Canada, yeah, that's right. It's a very top of mind topic that people have on a daily basis. Yes, we're in the real estate industry, but my goodness, when I was considering buying my first home, it was already a topic of conversation at almost every dinner table. And people really do focus on it here, I think, more than the States, which does, result in people feeling a bit of a pressure perhaps to buy.
And Dan, I'll just second that as a parent to a 6 and an 8-year-old, me and my wife are already talking about setting up strategies so that our kids can own a home one day. So, we're already talking about it before they can even conceptualize it, right? It's that ingrained in our society.
Can you jump in a time machine and have that conversation with my dad, please?
Sorry.
But enough. But in all honesty here, no, let's move on to another thing, because most people, like we've kind of discussed so far, they will buy a home when they want to, when they're financially able to and comfortable to, and when it, of course, feels like the right time. But a small cohort will also do this on the data. And this next section is for that group, but also people rely on their real estate professional to be able to convey what's going to likely happen in their immediate area of where they want to buy a home. And when it comes to prices and it comes to the neighborhood feel and the plan and who's moving there, what type of homes are going to be built there, is there high rise expected in the next 6 years, that type of thing. And so let's take a bit of a macro look at this next data point because it will affect housing prices moving forward. So the promise of building new homes from every level of Canadian governments, it's been a key focus for obviously months and years, but honestly, it's been over a decade now, or decades even. It's really been front and center because, of course, rising prices and a chronic shortage. While there has been, a pretty good recent success in the amount of purpose-built rentals that are being made, in fact, they're under construction at an all-time high rate right now. And part of what the result is lowering rental rates. Success, right? Supply and demand economics at work here. But when we look at the current state of housing starts built for end users, for home buyers, it's nothing short of devastating. Starts in March came in at 214,000. On an annualized basis. But that is considerably less, 14% less than the 245,000 starts that were expected. But do note, as I mentioned earlier, this is predominantly all in the purpose-built rental space. Condo construction for end users, as an example, is in an absolute free fall. 80,000 are under construction back in early 2024, for our reference. Jump forward to today, that's dropped to 55,000 across the country. That is a 45% drop in about 1 year. It's an absolute collapse in the construction of condos across our country. Now, some might say, great, we don't need those. But it's not like it's being replaced by single family homes, townhomes, duplexes, and so forth. That 45% number, that 55K where it is today, that will continue to fall. When we take the rental component out of the equation that I'm discussing here, housing starts overall have just dropped to the lowest amount in 15 years. Yet there are 21% more people in the country since 15 years ago. Breaking it down further, here's how it looks by province when we're talking about which provinces have seen the largest reduction in new housing starts year over year. PEI, 12% reduction. Nova Scotia, down 24%. Here in British Columbia, housing starts year over year are down 30%. And to top it all off, to take the cake, we have Ontario. Housing starts are down 38% since this time last year. This will have significant effects on housing shortages in the upcoming years, right? I know you look around today and say, hey, Dan, you just told us there's an 11-year high in inventory. It's absolutely true. Everything's a cycle. mark my words, there will be a housing crisis again as this starts to play out over time and over years. Remember, the CMHC recently reported that Canada needs to build an additional 3.1 million homes on top of the current rate by the year 2030, which is only 5 years away, to create just a simple balanced market. Yet the two provinces that need the most homes are down 30% and 38% year over year in this goal. And Toronto, well, I'm not going to give it away. I'm going to let Ryan do this segment, but there's something that also really accentuates this information. So ultimately, it doesn't take a genius to realize that when you've got a country that's still growing and you've got a housing shortage overall, you've got projections of 3 million that are needed within 5 years, and you've got starts falling off a cliff, well, I think you can kind of see the writing's on the wall, right? It's a bit of a crystal ball as to what can happen or what will be happening should that not start to normalize. So definitely take housing starts, especially in the region that you are looking to buy or sell in, into consideration when you are potentially making that move.
I think we'll start to see a change in the inventory levels as soon as we start to see a bit more price correlating with interest rates, because right now, and correlating with income levels, I think one of the reasons we're seeing such a ballooning of inventory in places like Toronto is because the prices don't make sense. I do think that they're going to come down. I think it'll be slowly, but I think they will begin to come down. And then as they come down, that inventory will get chewed into. And Dan, like you said, then the writing could be on the wall, especially knowing we have a Liberal government now, knowing that they are, likely very pro-immigration going forward. I don't see this sort of thing stopping. I think that it's going to be inconsistent and it's going to take time. One of the sad things about your segment there, Dan, too, was this huge focus on rental purpose-built homes. It's not, certainly keeping people in the city is an important part, and I think keeping people, near their jobs for a decent quality of life is important. But it really reduces the opportunity for Canadians to make wealth or generational wealth or get into the market in another way. It would be really, really heartwarming to see an initiative where, this is strictly, we're seeing new inventory come to the marketplace that really benefits first-time home buyers and young families to get in, where they can actually build wealth, not just be in the city, but build wealth. That's a really important part of why people own homes in Canada as well. We have a whole tax arrangement around your primary residences for this reason, right? Moving on now to housing market inventory. And with price cuts have just hit an all-time high, a decade high, actually. So get this, this is fascinating. In total, 302,000 homes in the US for sale on Realtor.com in March of 2025 had a price cut. That represents 34% of the active US housing market. After all, even during the pandemic housing boom, when home prices were surging, 18.7% of US homes for sale in March of 2021 still saw a price cut. But currently, this is the highest in the last 7 years. And this is a strong indicator as to where prices are likely going, not just in the US in the near term, but I believe here in Canada as well. I think we're going to have a relatively similar outcome.
Quick update on the arrears data as the newest information is out, and it ticked up again. So arrears are when people have not paid their mortgage in 3 or more months. In Canada now, it did increase by 0.01%. So we're now at 0.23% of all mortgages across the country are in arrears. When we look back, we're trying to talk kind of pre-COVID numbers, as things have not really been normal since COVID. But in March of 2020, so basically the month before the true lockdowns, the arrears rate was 0.24%. So we are almost back to those pre-pandemic levels, with an extremely high likelihood of hitting that next month or in June here. One of these 2 months are going to definitely bring us back to pre-COVID levels. When we break it down by province, Ontario lifted to 0.2%. That was now taking it out of the sort of the least amount of arrears, leaving just British Columbia and Quebec as the two provinces with the lowest arrears rate at 0.19%. On the other end of that spectrum, Saskatchewan has the highest amount of mortgages in arrears at 0.58%. But what's interesting about that province is they've actually been improving for 2 straight months now, down from 0.6%. So again, I'll reference it if people didn't happen to see that segment in an earlier episode. Even at the all-time high of national arrears rate, which happened, I believe it was in the 80s, and it was in the 0.6s, home prices at that same time were actually increasing. So high arrears rate is not a standalone metric that causes prices to fall, but it obviously indicates there are other financial pressures within the landscape that will result in things like a lower GDP, which then ultimately can bring home prices down. But always interesting to watch this data point and how it evolves through time.
I wonder, Dan, do you think the arrears rate's going to get worse from where we are today?
Absolutely. Yeah. If you remember a couple of weeks ago, we did that segment that compared interest rates to arrears rates. And yeah, it could easily be up in the mid threes at some point, should interest rates not move or all the other economic factors shift into, I guess, the favorable side of things. But yeah, it's very likely going to get into the threes at some point this year.
Interesting. Okay, let's move on to some interesting data points here. I want to talk about the fastest growing city in North America. So from mid-2023 to mid-2024, if you had to guess which North American city saw the largest population growth, you'd probably say New York, maybe Dallas, maybe it's LA. But the answer is Toronto. The city added 255,000 people in that time frame. In the context of Canadian and American cities, this makes it the fastest growing metropolitan area for the last 2 years running. I think it's also noteworthy that the Toronto housing market turned and pre-construction sales slowed around the middle of 2022. And yet our population growth and immigration levels remained the highest in Canada and the US for 2 years beyond that. Today, the Toronto real estate market is also the slowest in Canada, yet its population growing at the fastest rate. This leads me to believe the real estate market has the potential to turn around. Whether it's quickly, we'll see, but it definitely has the potential to turn around. Again, I think when prices are correlating a bit more with incomes and expectations. The sense that volumes will also pick up is even more likely as rental rates will begin to see upward pressure, right? I mean, if nobody's buying and everybody's coming to the city, those rental rates will likely push up a little bit. And maybe that will help some investors not have to sell their properties if they can rent them and cover some or most of the debt on the property.
So we've been reporting on the pre-sale market in both Toronto and Vancouver and how bad it is. And update, it's just getting worse. The number of newly completed unsold condominium suites in Vancouver is expected to increase by another 3,500 by the end of this year, which would be a 60% increase compared to the end of last year. And we're going to be sitting, or we already are sitting, basically at one of the highest levels of unsold inventory of all time, right? It's near an all-time high. When you look to the Fraser Valley, they are already at an all-time high. Toronto, all-time high. Vancouver is going to achieve that very shortly as well. The main reason for this increase, I think fairly obviously, is that the individual investors who are the predominant buyer of pre-sale condos are out of the market almost entirely. I mean, look at Bob Rennie, right? The condo king. His brokerage, Rennie, had some recent data out from all the condo projects that they represent. They stated that investors made up about 50% of their buyers from 2020 to 2023. Okay, not much of a surprise there. But in 2024, that number dropped by half down to 25%. And so far this year, it's down to 7%. Okay, this is a brokerage that focuses largely and almost predominantly on the pre-sale market. And they have now seen the investor segment drop down to only 7%. So with the investors out of the condo speculation game, very few other people are buying, right? If you're an end user, if you want to buy a home, maybe it's your first home. Do you want to go into a pre-sale presentation center and buy a home that you don't get to get the keys for 5-6 years? Obviously, there's a smaller market for that than investors who can speculate and have their money tied up in the market for that time while they ideally hope it appreciates. Now, There's an example. This just happened. I'll be a bit aloof because I don't know how much of this is public knowledge, but this just happened. So there's a project that was for sale in Burnaby, and they've been on sale for a year. And what happens with pre-sale projects is you have to sell X percent of your units to be able to achieve construction financing if you need construction financing. And this project did not achieve that. They sold, let me just do the quick math. Oh gosh, only about 10% of the available units, maybe 15, but it's clearly not enough to achieve financing, which can be upwards of 40 to 65%, depending on the how much cash they've got to back it. Anyway, point of the story is this was a building that had over 250 units in it. And the units that did go under contract that were sold, well, all those buyers are getting their money back. They're getting their deposit back. All the realtors who maybe got their 50% commission, they got to pay that back. And just think of the knock-on effects here, right? Like think of the money that developers lost in their holding costs, in their marketing costs, in their staffing costs. And, in a country here where all the politicians were touting progress and 500,000 homes a year and accelerator programs working, well, it's BS, right? Because here's the reality. And here's a perfect example of what happened this month in real estate is that developers are trying to bring homes to market and they can't, right? This project was going to bring, like I said, over 250 homes to market. Gone. Done, right? No additional 250 odd homes for Burnaby. It's currently unknown if that developer and that project will come back to market or not, right? You can't bring it today. Nobody's going to buy it today. So this kind of turns the conversation to that old adage is too many speculative investors are buying new homes and are outbidding actual end users. Okay, there's just too many speculative investors. Investors have too much money. They're just beating out all the end users. And this happens in resale condos too, right? All those evil fix and flippers that are trying to make nicer homes for people to live in. They have more money so they can outbid the average home buyer and flip it and make even more money, right? But today, investors are almost entirely out of the marketplace, obviously out of pre-sale and largely out of resale, leaving almost 100% of the active inventory, which is at an 11-year high, available to end users. So where are they, right? We're seeing very, very low sales in real estate today. And with this 11-year high and prices are off their peak and there's tons to choose from and majority of homes are selling under ask and you don't have to bid against other people and you can have terms and subjects and reasonable, negotiations. And yet, all the people that complain about the busy market, they're not here now. And I'm not saying they should be, I'm just sharing anecdotal stories, right? When the market technically favors buyers, the buyers go to the sidelines. And again, so to kind of bring it back to the speculators, maybe we don't blame investors, right? So again, investors are gone, buyers don't want to buy. But yet, in a hot market, it's the investors that are the problem. So I don't know. I'm not taking sides here. I'm an investor. I'm a homeowner. I've been on both sides. So up to you to debate that. But ultimately, given a landscape where investors are gone, home prices are still high. Sure, it's been going on for decades. I get it. It's systematic. But here we are. So to tie up this segment here, is it more of the majority of homes available, they just simply don't meet the needs of the average buyer? Or is at least not at an affordable price, right? I mean, clearly, if there's a ton of homes available, but nobody wants them, they're largely not the right home. And yes, affordability comes into play, but either way, blame the investor or not, be a homeowner or not. I mean, the landscape is very different now, and it's your choice is who you want to either blame or thank for the landscape.
Yeah, I think, Dan, it largely comes down to price and the utility of the product, like you're mentioning. I think, I think for what you're buying in Burnaby, as an example, we've heard stories of pre-sales in Burnaby, beyond $1,400 a foot, $1,500 a foot. And I'm just not sure. I mean, that maybe in a global market, compared to something like Hong Kong, that makes sense. But when you compare it to other parts of Burnaby, or when you compare it to other parts of Vancouver, the pricing I don't think it lines up. And I'm not entirely sure the utility does either. So I think it'll be very interesting to see how this unfolds. But, there's other segments of the marketplace, like townhomes and things like that are selling, is still going quite well. But it's really those condo projects specifically, I think, are really taking a beating right now. Moving on here to retail sales. So a quick update on the economy here. Canadian retail sales decreased by 0.4% in February compared to the previous month. And compared to the same time last year, retail sales are up by 4.7%. This metric was more noticeable in BC, where retail sales were down 0.6% in February, but up 4.4% year over year. In Vancouver, retail sales were down 0.9% month over month, and February's report marks the second consecutive month of slower sales after several months of retail growth during the fall and winter. To be expected in the wintertime, Christmas and all of that. As tariffs and their associated uncertainty continue transmitting into the economy, central bankers and economists will closely monitor whether this downward trend continues into the summer. Even though you're buying less, they also want to look at whether prices are going up as a result of that. Should this trend continue, it'll weigh heavily on the overall GDP and push further into a recession, potentially instigating more rate cuts. And that kind of brings us to our next point, which is the overall GDP. Canadian real GDP decreased by 0.2% in February, following a 0.4% increase in January. 12 out of the 20 major industries contracted from the previous month, driven by mining, quarrying, oil and gas extraction, construction, and transportation warehousing. Finally, GDP for real estate offices and agents was down 10.5% month over month. Preliminary estimates suggest that real GDP is increased by 0.1% in March, so almost no change. Following a strong start to the year, Canada's February GDP data revealed a deceleration in economic momentum. I think we all felt that, bringing growth below the Bank of Canada's most recent quarterly forecast. Notably, this report also makes the initial economic impact of newly implemented tariffs, which are expected to further weigh on activity in the months ahead. At its latest policy meeting, the bank highlighted the inflationary risks associated with these trade measures while signaling a cautious approach to future rate decisions, contingent on the evolution of price pressures. In this increasingly uncertain environment, upcoming CPI and GDP data is going to be pivotal in shaping the bank's policy and how it moves at the June announcement. If we look south for a second here, the first quarter of 2025, the U.S. economy contracted by 0.3%, making its first decline since 2022. This downturn was primarily driven by a surge in imports as businesses accelerated purchases of newly announced tariffs, which significantly widened the trade deficit and subtracted 4.8 percentage points from the GDP. Inflation pressures intensified with the core personal consumption expenditures index, the PCE index, rising to 3.5%, up from 2.5% from the previous quarter. Analysts caution that the front loading of imports may lead to a sharper slowdown in subsequent quarters, especially if we keep turning around all the different trade policies and tariffs. They turn on a dime. Now you've got businesses that have made investments because they feel like this, products are going to be more expensive, and then that turns, and now all of a sudden they're not. And the demand's just not there. So this obviously raises concerns because it puts a ton of cash flow pressure on businesses that could put them in a recession later in the year. Should this downtrend continue in the States, it'll bring down Canada with it, resulting in two very sluggish economies and an increased likelihood of lower rates to follow. I think what's interesting, Dan, I just want to make note of this. If you look at overall GDP growth, and I think this is where people kind of get, I'll just draw an example here. This is where people kind of get confused. If prices go up, GDP looks like it does better. Here's what I mean. If you take, let's say you sell cell phones for a year. Let's say you sell 10 iPhones. Each one's $1,000. And then next year, prices go up because they have to. You now sell each cell phone for $2,000 per piece. You've made $10,000 versus $20,000 the year after. But GDP, if you actually look at it, the actual domestic growth, the growth of that particular model There's no more actual growth. There was 10 units sold here and there was 10 units sold here. It's just now that the prices on this side have gone up, making GDP look better than it actually is. And that's why things feel like they're happening on paper, but it feels like you can't afford anything.
So as you can tell, there are many ways and many economic factors that weigh into what happens with housing prices. And another way to look at it is many people, they will buy a home and just not care what the market does for 10, 15 years. You know what I mean? You just buy it and you pay down your mortgage and you enjoy the stability and you enjoy your home, right? It's like, do you buy Bitcoin and then check the chart every 45 minutes? Or do you maybe buy index funds and cost average, i.e. pay your mortgage every month and then not worry about it for 20, 30 years? Right? Choice is yours. Do whatever you want. But again, the markets are going to move, but you're going to buy or sell or rent and do whatever's best for you. We're just here to help educate. Now on that, in our last segment of the day today, we are recording this on May 1st. And so most of the April data for Greater Vancouver is out. The official announcement hasn't been released yet, but we love to give you the information as early as possible. So we'll just give you a top level right now. But do know, as always, we will go in depth in all the Vancouver real estate data for the month of April on next Saturday's episode. But to give you guys the early insight into what happened in April, sales still obviously very low. There was about 2,155 homes sold in April. That is incredibly low. It's actually a 6-year low. I mean, outside of April, which was literally shut down in 2020. So sales are back to 2019 levels. New listings, while high, it is actually down a bit year over year, about 6,900 new listings. Inventory, of course, becomes interesting. 15,800 active listings today, which is the highest in 11 years. And there's one segment, you can probably guess it, is ahead of the rest, but all of them are quite high. And we'll break that down again, home type by home type next week. Prices, of course, HPI is not out yet, right? That'll happen next week. But remember, HPI has increased every single month in 2025 so far. So is April the month where it actually turns to the downside? Time will tell, but you might get a hint of that based on what happened with average and median prices. Median, 950K right now. That's up for the third month in a row. Average on the other side, it went down about 20K, sitting at 1,216,000. Forever interesting, forever moving at basically a fast pace, data-wise at least, definitely not sales-wise, but either way, full report for you guys next week. Thanks as always for tuning in and listening. We really appreciate this. Please share this with somebody that you think might also get some value out of it, and we will see you here next week. Bye.